It's eCommerce Minute, your weekly dose of e-commerce, tech, and retail news with your hosts, John Suter, Bart Mraz, and Brittany Blackman. The eCommerce Minute is a production of SUMO Heavy, a digital commerce consulting firm in Brooklyn, New York, and Philadelphia. Find us on the web at sumoheavy.com.
It's the eCommerce Minute, episode 782.
We're doing something a little bit different this week. We're going to do a special report about the GameStop stock saga. Unless you've just arrived to Earth, you've probably seen a few headlines about the ongoing GameStop stock controversy. So today we're going to try to break it down for you as best we can in a short amount of time. Over the past couple of weeks, the financial world watched in shock as GameStop stock, and that is very hard to say, rose to unthinkable levels. And in true 2021 fashion, it's all because of the activity of social media investors pushing it up. Even supervillain and sometimes world's richest man, Elon Musk, tweeted about it, pointing his 43 million followers to a link of the Reddit community investing in GameStop. A little background. GameStop was founded a year before Blockbuster, way back in 1984. The retail chain, as of late, though, has been struggling against an uncertain future. In the not too recent past, GameStop stores were an integral part of every mall. Gamers would line up to buy and sell physical video games and accessories. GameStop was a great place to buy new games as well as the new-to-you used video games on the cheap and to unload the games you were done with, even if they only gave you back pennies on the dollar. Well, fast forward to today, some of these very same gamers have become rich buying the company's stock. Let's take a minute to break it all down. On January 22nd, 2021, GameStop stock zoomed upward 69%, nice, from 42.59 to 76.76 before it triggered a circuit breaker halt. Then the following Monday on January 25th, GameStop trading was halted 9 times after a high of 159.18. The closing price on 125 was 76.79. And from there, the stock only went up, reaching a high of $483 per share only last Thursday, and now plunging more than 80% in less than a week. For perspective, the average GameStop stock, this is a tough sentence. For perspective, the average GameStop stock price for the last 52 weeks is $13.74, and the 52-week low is $2.57. Well, how did this happen? One theory is bored, newly minted day traders. Since quite a few of us have been sitting on our butts for the past year or so without much financial assistance or much to do, interest in day trading has shot through the roof. Some point to a Reddit forum for this called R Wall Street Bets, which describes itself as being like 4chan found a Bloomberg terminal. Their mission has 2 goals: drive up stock prices to score profits for themselves, and at the same time, force the establishment investors to abandon bets against struggling companies such as GameStop, AMC, and several others. Reddit traders that frequent R Wall Street Bets noticed that GameStop stock was ridiculously overshorted, and they responded by buying the stock en masse, driving the price up higher, forcing shorters to buy the stock to cover their losses, known as a short squeeze. Shorting, or short selling, is when an investor borrows shares and immediately sells them, hoping they can scoop them up later at a lower price, return them to the lender, and pocket the difference. This action put huge pressure on hedge fund Melvin Capital and other shorters. Eventually, Melvin said it exited its short position on GameStop, likely at a massive loss. Melvin reportedly lost $4.5 billion with a B in asset value in January, a 53% drop after its massive bet that GameStop stock price would fall, after its massive bet on GameStop shorting turned sour. And that's after a $2.75 billion cash infusion from previous investors who jumped in to save the fund from collapse. As of January 26, the short sellers have been trolled out of about $5 billion in 2021, just from the GameStop positions alone. But it's not just GameStop. Our Wall Street Bets also toyed with electric car maker NIO, OG tech company BlackBerry, and AMC, the movie theater chain. And if those day traders are doing it, then the market makers that buy the order flow from Robinhood are cautiously along for the ride. The fun didn't last very long. Robinhood, contrary to their namesake, seemed to be getting upset that Wall Street elites were losing a buck. Robinhood then added new limits to its app to restrict users from buying or trading any of the popular Reddit stocks, including GameStop, AMC, BlackBerry, Bed Bath & Beyond, Nokia, and more. Users were allowed to close out existing positions, but wouldn't be able to buy more of the stocks. The company cited, quote, recent volatility in the market as the reasoning behind the change. The move by Robinhood has already attracted the attention of lawmakers and angry Redditors alike, with Representative Rashida Tlaib posting on Twitter that the decision was beyond absurd and calling for a hearing by the House Committee on Financial Services on Robinhood's market manipulation. In retaliation, people started leaving one-star reviews for Robinhood in the App Store and boycotting the company altogether. Google had been actively removing negative reviews of the Robinhood app from the Google Play Store, but as of this recording, I think they've flooded back. One thing to watch is whether the Reddit investors will lose their millions whenever the stock eventually crashes back to earth, which as of this recording, I think it is. The man who founded that Reddit community said their approach to investing is more like gambling than traditional analysis and strategy. Thank you, Captain Obvious. Lot to unpack here. Bart, would you like to start off?
A lot to unpack. Poor GameStop.
Poor GameStop.
I mean, there's a lot going on. Let's start with the obvious, right? GameStop wasn't worth that much, to be fair. If you look at just the worth of the stock, there's no way that was even close. So what was happening is some of the Redditors or people who were day trading noticed that hedge funds were starting to short it. And they have to, and hedge funds, I think they have to put out that they're going to short stuff wherever the SEC rules are. Somebody noticed they're going to short it. Rightfully, we can talk about why shorting is good or bad in every single way, but it's not worth that much. And they started picking on it. So it makes sense if everybody floods the market and it goes up, right? Like but it's dangerous territory, because you're putting money into something that will drop at some point, and can you get out of it? The problem with Robinhood or any other sort of retail type trading platforms is they sell that trade. You're not actually trading fully. They have to sell it. That's why you can do partials too. So they'll sell it to another investor and go through that process. There's a lot of process and procedure to go through it. Like I said, GameStop wasn't worth that much. So it was playing with fire all over the place. Now, if you got into it, 6 months ago and all of a sudden this was happening, you dropped out of almost the top of the market. You made serious money.
Yeah. So for every 5 of the success stories, and we've heard, of course, the news reports on the one kid who, he got enough money to pay for his college, and another kid that, his parents gave him GameStop stock when he was a kid, and they went and sold it, and this is a little kid. Now he's got enough money, for his
college.
For every story like that,
there's thousands there's thousands that did wrong. Like if you got into it 2 months ago and you saw it coming up and you just left it and watched the whole story, and all of a sudden you're like, all right, I had enough, I'm out. You made really good money. Sure. But if you got into it 2 weeks ago or 3 weeks ago when it started happening and you not paid attention, then you really got screwed.
Yeah, a lot of people are going to get destroyed by this. A lot of people who really didn't know what they were doing. They're following the hive mind. They're doing the social media thing. All the cool kids are doing. So I should. Oh my God,
it got hot. Yeah.
I'll throw $1,000 in here. I'll throw $5,000 in that they probably don't have.
Right. I mean, if you look at, you can make serious money on basic stocks, right? If a stock is $5 and it goes to 10 and you threw a lot of money into it, you doubled your money, right? Sure. You really did well. But if the stock is, $150, it goes to 400 and you don't see the downturn, you're going to lose a ton of money. So the hot stocks like Amazon and Facebook and all those ones, yeah, you might get partial shares, which we've seen done, but what's the percentage change, right? That's the most important thing. You don't have to be in the big stocks for that to go. I mean, obviously if you bought Tesla at like 50 and now it's whatever it is, it's insane, right?
It's at 82.98 right now.
Right. So
this is as of Thursday, February 4th.
If you were smart to watch the market enough, you could have seen GameStop do it. The problem is that went into AMC and other stocks that kind of were playing in that same game. Mm-hmm. And they're not the same thing. Like GameStop is going to go out of business. And I say that like we had a client that got sold to them at one point, and we also know a lot about the gaming industry. It's who goes to the store to buy a game anymore? Right. Everything's downloaded. Absolutely everything's downloaded.
That's the thing that's so bonkers about this. So you could, if the same analogy happened with AMC or BlackBerry, well, BlackBerry, there is some viable technology there. AMC, people are still going to movie theaters, but the fundamentals here just don't make sense. I mean,
No.
it's GameStop was going under, this is the analogy would be like let's buy some Blockbuster stock. I mean, it's a business that's kind of going away. And no matter how they try to pivot, there's still a physical store that's selling a physical product that really no one buys anymore. But even if they do buy it, their big thing was selling used games. But I know I used to buy used games. You're not getting enough. You're not selling enough games to warrant a valuation of $423 a share.
No. And that store's going away. I mean, it will.
But what's happening here is, everybody's like, oh, GameStop's doing great. Well, they can't touch that money. I mean, this is a real company that they're playing with in people's lives. And it's just, it's, as you had said, it's very, very dangerous.
What's also dangerous about it is like, if you look at it from multiple ways, right? So people stick in it, like they're trying to do the same thing that hedge funds been doing forever, but they're also regulated, right? As much as they're doing it, they're hedge funds and stuff like that, they're regulated. When you're retail and playing with money, it's dangerous, but you also got to look at the big picture, right? Now you're playing with the stocks, not just GameStop, but you're sticking with stocks where people's retirements are in there.
Yeah.
Stock market drops, especially right now where people have no money.
Yeah.
And trying to retire. Like,
can you imagine if GameStop was in someone's pension fund?
Yeah. Pensions. I mean, you're playing with a big game. Like, in reality, as much as we complain about the game of hedge funds or, they're hedging their bets, obviously, right? Or these big investors, they're pretty much going for what the market looks like, right? They're looking, hey, the company's doing well. It's going to go up. Yeah, maybe low right now, but we're going to, price it well. We're shorting it. It's shorting is weird to me because it's betting against the company, which I don't like, but it's one of the tools.
There's something morally wrong.
Morally wise. But if you look at it as a tool, most when they're shorting, the hedge fund shorting it was a right move. It's not going anywhere. It's not worth that much. Right. So overall, if you look at it, there's that play was just bad. Yes, people made money and you can go against the thing. And we looked at it all the time and we were laughing about it. But also you got to look at the reality of it is, like you said, pension funds, there's 401ks. People have a lot of money around that people need to retire on.
Yeah. I mean,
that's dangerous.
There's other examples of people shorting where you have active investors, right? Like Bill Atkinson. I think he did that with Chipotle, and he did that with Nutrisystem or Herbalife or whatever. Right. But basically saying this company is not worth what it's worth. We need to bring it back down to life, and then we're going to step in and fix it. That's a different type of shorting. But
that's buying a whole bunch, shorting and then buying a whole bunch of stuff so you can actually
take over the company.
Take over the company, right? That's crappy too. But at that level, it's just different. This is such a different play.
This makes absolutely no sense. And the victims here are going to be these kids on Reddit. And I say these kids because I'm sure there's some grown-ass adults doing this, but for the most part, if you're, I don't know, man. And now I heard something this morning, now that, of course, that chat room got overrun. I don't even know if you can get into that.
What they're saying is like a whole bunch of hedge fund people jumped in to play, and they're trying to figure out if that actually what's happening, where it got brought up and they found a way to do it. Who knows? And I
heard something this morning that now there's a bunch of bots in there that are basically saying, no, here's what you should be betting on. And they can't take the posts down fast enough now because now the thing is overrun with bots making and giving investment advice. So it's become even more dangerous. I don't know. So I mean, it's hard to even say like what's going to happen. I don't want to see this become a trend. Like it's all fun and games, and we all kind of had a little chuckle about it until it kind of went on and got up to $483 a share.
Yeah, and you're like,
it's not good. And now, of course, here's the thing. It's, when something happens, there's a mania. It's the wisdom of crowds. It's like, I see him doing it, I'm going to do it too. So then once the easy money is gone, they go, what's the next thing? So what happened? Silver prices are going up. So then the conservative silver investors are going, oh, I can't do this. This is too volatile for me. And now they're playing with silver. And Okay, so there's probably a lesson to be learned in that. Yes, the big Wall Street controls the big money, and we're just the little guys, and that's become more than apparent in the last 2 weeks. But on the other side of it is, don't gamble with money you don't have. I mean,
partially, so you got to look at it multiple ways too, right? It's bored people who have money who haven't gone to a bar, they have, for Becker logos, have some disposable income that they're not spending otherwise. But also, I bet you a whole bunch of people jumped in because they don't have money. Like literally they got their check last year, stimulus, and that was it, right? And you're like, well, I got to survive somehow.
Sure. And you see those posts. I turned my $600 stimulus into 10 grand. Well, crap, I could do that too, can I? Well,
right. And that's where it's dangerous, right? Somebody got lucky. Somebody was that kid that put in $600 or whatever, $500, and paid off his whole college loans completely.
Sure.
Smart. The problem is there's going to be a lot of people that are like, well, I can hold it. Right. And you're like, by last Friday, we're like, all right, Friday was interesting. It dropped. And then like, all right, you can buy in the morning. And if you can cash out at an afternoon, if it's going the way it's going, you'll be fine. And then by Monday, it was in hundreds, right? Like if you left it in there over the weekend, you're screwed.
Yeah.
Yeah.
Can you imagine waking up
and how
Monday
fast
morning?
you're right. And like, and if you look at, you look at something like Robinhood, where they got, they had to borrow money. It's like a casino. You have to cover it. And they had to borrow $1 billion. And I think they raised another $4 billion the other day.
They've borrowed more money in the last 2 weeks than they borrowed in their whatever,
ever.
6 or 8 years in the 8
they
years
had
of existence.
because they have to cover it. Legally, they actually have to cover it. So imagine if they ran out of money and you couldn't cash out. Like you're just screwed.
To your point about people not having money gambling, my brother is the perfect example. He is literally a broke college student who didn't even qualify for the stimulus. And he was like, if I just put another $20, and then an hour later it was, if I put another $20.
Yeah, because you did that stupid calculation in your head. If I put $100 in and it goes up that much, and you're like, slow down.
See Bitcoin.
Welcome to gambling. And it's a gamble. And the thing with, you also go and compete with high frequency trading. It's milliseconds these things do. You're trading against computers who are milliseconds. Like that's how fast they're trading. You're never going to compete in that world. Yeah, it's always changing. And it's, it's sucky sometimes. Let's just look at it now since we're here. Oh, Jesus. It's $83. 83 exactly.
So it's up.
At
when
10 o'clock.
When we started the podcast, it was 82.56. Now it's 84.60. So somebody's playing around. But it really dropped.
From 480?
It was 91. It opened this morning.
Jeez. Yeah, but they lost a lot of money. Like it's probably priced at the right price at the moment. But
right. And to not to add levity to the situation, but the funniest headlines I saw yesterday was Barstool founder Dave Portnoy sells GameStop AMC shares at a $700,000 loss. He was the stonks only go up guy, and now he said, "Nah, I'm done." But I think Dave Portnoy will be okay. I think he was just,
Yeah, I think the guy who really made out at some point, there's a hedge fund that made like $700 million on this trade. And then there's the guy who's the CEO of Chewy. When he sold Chewy, he bought tons of GameStop. And that was a weird thing. He made like $1 billion in that trade if he sold it. I don't think he did.
Right. But why did he do that? He did it as a short?
No, he bought, no. He just bought
straight
GameStop.
up.
He bought GameStop tons of shares a year ago. I think
he bought it a year ago. Okay.
Yeah. He was looking to probably go take over and try to actually do something with it at some point.
So it was more of an activist thing.
Yeah, he was trying to get in there and do something with it. I mean, he has a good success with Chewy, obviously. So I don't know. That was a weird, we'll see. I think this is more of a flash in the pan, and we'll see what happens. This kind of stuff. I think if we were not in pandemic and lockdown and a lot of political stuff weren't going on, we would never see this happen. It would be happening, but we wouldn't even pay attention to it.
Yeah, fair enough. I think that's accurate. I think
it would be on a smaller scale.
Definitely a flash in the pan. I mean,
listen, John, you and I put money into stock and we watch it, but we also are careful with it. Like, I'm not going to put tons of money into things.
I would never touch this stock.
I was going to on like Thursday because I knew Friday is going to be a thing, and then just sold it off on Friday, but I didn't.
Well, full disclosure, like you and I, we always talk about this stuff, and I bought one share of AMC, and it's already worth half of what I paid for it.
Right.
Just to see.
But then, like in that same time, if you look at it, look at things like Tesla and Amazon and all the good stocks went down, and you're like, what is happening? I mean, good for us because we buy at a cheaper price.
Right. But it drove the entire, like last Friday, like I do a little recap, and it was like I got clobbered last week. I'm like,
I mean, Tesla had
Redditors.
I mean, Tesla had good, obviously, numbers. They had an issue with some stuff, so that went down, which is fine. I mean, it's going to keep on going up. And then Amazon, like huge stories all of a sudden. Amazon, amazing quarters, obviously. That's just given.
Right, like stellar quarter, just got lost.
And then stock went down. We'll talk about Bezos next week. That's a crazy, awesome. I think it's a good thing.
Yeah, there's a lot of conspiracy theories like, what is he hiding? No, this is
not hiding anything. You can't just overnight do it.
this company is on. It's going where it needs to go. There's very little that he could do to change the course of this ship.
And the little preview of next week. First of all, the guy is interested in space and everything else he wants to do. He has all the money to do it. Yeah. Two, the guy who's taking over has been there since 97.
Yeah, and he's the cloud guy. That's the future of the business.
He actually built AWS. Right. So guess what? Where do you think Amazon is going to go? I mean, it makes absolutely the most sense.
Also, to you conspiracy theory peoples, see Bill Gates and also the guys from Google. I mean, you don't have to hang on forever. There's a point where
they know when to step out. Right. They know when to step out. So we'll talk about that next week.
I'll do that.
But you look at that. You look at what else was there? All the good stocks. All of a sudden, like actual good, proper stocks. So you're like, what is happening?
Yeah, probably.
I mean, good for us because we could buy it at a cheaper price.
probably a turbo week to go public last week too. Anyway. All right. Well, we could keep talking about this forever, but this is not a investment podcast. And apologies to those who came here looking for e-commerce news. We did talk a little bit about the GameStop stores themselves, but I think this was too big of a story to just kind of ignore.
Yeah. Also, big disclaimer: don't take our advice on investing.
Yeah, we do not offer investment advice. This is not an investment podcast.
Just isn't. This is just FDIC. Just us chatting.
Yeah, we're just chatting here. So we'll be back with the regular show next week. As Bart had mentioned, we'll cover the Jeff Bezos retirement story, or whatever we want to call it, stepping down, and a couple other stories we got in the hopper there. But
going to the moon.
Going to the moon, baby. All right, so that's it for this episode. We'll be back next Friday to break down all the week's e-commerce, tech, and retail news. And don't forget our other long-form podcast called In the Ring. It's available on Spotify or wherever you get your podcasts. Until then, we'll see you on the internet next Friday. And remember, don't gamble with money you don't have. Bye, guys.
Bye. So I shouldn't go to a casino?
You feel lucky, punk?
Okay, bye.
Bye.